Good evening, everyone. It's me, Kelvin, from Round and Search. So today we will be looking into how to gain back your trading confidence or investing confidence in the stock market. Okay, so basically, I'm not. What I'm going to share here today is more a bit of the trading psychology. But the trading psychology part, I know is the hardest point for every one of us to look into it. But I have a little tricks over here that I can actually share to you to actually reduce the emotional trick that you have and all those emotional decisions that you have made before. Okay, and also how to look into the market and knowing making make sense of all those price and volume movement. So things are making sense, when you look into it, then you start to have more confidence and enter into a trade, and you will know what to do, whether to cut loss early or you should actually continue to hold up until the point where you can take profit. Okay, so before we start, remember to give us a like and also follow us and subscribe to our YouTube channel and Facebook page. Okay, and so every now and then, every week, we will have like yeah, live of intraday trading and also some of the market outlook we will be sharing out. Okay, so remember to do that. And if you find it is interesting that every one of us or every one of your friends or trading in the stock market is good to know about this, then share it to them. Okay, so before I start, also let me share with you a bit about Brown and Search. If let's say you are coming into this for the very first time, myself, I've been traded in the stock market for 13 years, I guess. So 19 up until now, now is 2022. Yeah, 14 years, roughly about 14 years. Okay, so the numbers doesn't really matter because I see there's a lot of people have been trading in the market for more than 10 years, but they are still repeating the same mistakes. So what is the best thing about, not to say the best thing, but the unique things about us is that, or about myself, my trading methods, my analysis is that I look into the big boys transaction. Okay, so how do they move the transaction data, the price and volume? How do they move the price? What are the volume actually coming in? That actually tells us a lot of story of the intention of these big boys, so that we can actually follow them. So I'm not so much of the traditional technical analysis where you plot the resistance or you plot the support line or you find the chart patterns. Okay, I know a lot of people have been using that. So I've used that before. So it's not working for me because it doesn't make sense to me. So whenever it doesn't make sense to me, so I find that when things is not making sense, so I find that you don't have that kind of confidence whenever there are signals for entries. So that's why I stopped using it. Okay, which is all of you might have the same problem as well, because you might start to think like, every time when you enter a trade, and then you put the profit target, put the cut loss point. If the price doesn't move up to the take profit target and it start to retrace, then you start to question: should you take profit right now, or should you continue to wait? Is this a retrace, or is going to have a reversal that is not going to touch our take profit point? Or when it touch the take profit point, will the price continue to move up higher, or it will just stop there? Okay, or if let's say the price goes down after you enter and hit your cut loss point, should you cut loss now, or should you bend your cut loss rules a bit and lower it down to more, so that you might be able to avoid that hit your cut loss and then rebound back up higher? Okay, so you have tried all of this before and you find it, you have switched before, you have bent the rules before, you have tried everything before. When you bend the rules, the price goes down lower, it does not rebound. But if you don't bend the rules, you become more disciplined, and then the price just hit your cut loss and then move back up higher, or maybe it doesn't hit your take profit point or things like that. Okay, so these are the questions that all the traders and investors in the market are asking. So that's why I understand this, because I've been through this before. So this actually tells us we need to ask questions. The analysis that we are using is having this kind of chart pattern and also resistance breakout is able to help us to know where does the price go. Basically, if you look into it, most of the technical analysis or maybe the indicators is just telling us that, okay, right now the resistance is broken. It doesn't really tell us that the price will continue to move up higher. Okay, it's just telling us what is happening in the market right now and what is the trend of the current market right now. So this analysis is more of telling us what is happening right now in the market. So it's the same as reading news. Is you can't say that it's wrong, but just that the people applying this analysis into the stock market is just telling us to apply this to bet on the market. So whether the price will actually move up higher, whether the price is going down lower. So last time when I started using technical analysis, I can say I'm a gambler. So basically it's something like you enter into a market, like enter into a casino. You're not sure, you go to a roulette table, there's various numbers over there. You're not sure which one will actually come out first. Okay, the ball will actually drop on which numbers. So you just pick, you just think like, maybe it's going to hit this point, okay, this area. So you're going to buy all these numbers. And then maybe it goes go into this zone over here. So when it comes out in actual, it's actually not. Probably it goes into the middle one, the numbers that is in the middle. So these are the things that a lot of people, they are speculating. So I find that it's not right. Investing or trading, you shouldn't be gambling. You should not be betting on something. We should know and consistently monitoring what are the things or the stocks, the investment that we invest in so that we can react to it. So that's why I look into big boys, because all of us, we know about the big boys, okay, in the market, whether it's, you can call it a market maker, which actually the market maker and the big boys or institutional funds, they are all separate, different people, okay. Market maker is a person that actually, not a person, is a group of entity just providing liquidity. So which means they park the shares at the sell side, and then they park the buy orders at the buy side, so to make sure the market is liquid. But there's a lot of people in the market, they always refer, some of the big boys that can move the price as market maker. Okay, so of course some of the big boys, they do their own market making so that it shows that, wow, it's very liquid, so that they can track the buyers who goes in. Okay, so we know that the whole market is actually moved by these people. Even if you look into like Elon Musk, okay, so the famous people, which is a billionaire, a lot of people like to look into success stories. So I'm going to share with you the success story of like Elon Musk. Everything he tweets in the market about the Bitcoin, about the cryptocurrency, then the price will actually move up higher, right? So this is the thing over here. So you can see that the market is basically really controlled by the big boys. In fact, without these big boys, the market will be dead. Okay, if you want to just rely on retail market, then it's a little bit difficult. Okay, but of course, some people would like to look into data and then say like, oh, you can see the retail market, they have this much of percentage are actually investing into the market. But this data, behind all this data, can you believe it, right? Or can it be some of the big boys actually having a few accounts that to go into one of the stocks? If you think like, okay, it cannot be, then please go to SC website and look at some of the cases and how these people, they have 40s over or 50 over accounts, okay, separate accounts to actually manipulate the price. All right, so that's why you can't say that this retail percentage are fully really retail investors. Okay, it can be one big guy behind and then controlling a lot of accounts there. So this is what I want to share with you later on more of how to look into price and volume to know that the big boys, whether they are going to push the price up higher or things like that. So I can't share the whole things over here. The whole, like, I have my own training course. I share a lot about the details of how the transaction data is like, how they do the accumulation, and then when to enter after the accumulation, and then when to exit when the big boys are holding lesser shares in hand. So which is telling us is a price peak. So, but I'm going to tell you some of the brief explanation. Accumulation part, I think I shared before in my previous live stream, so you can have a look into it. But the whole thing will actually takes me like 6 months to actually share with you all this in the training course. So I do have my training course. If you are interested to it, you can look into the link in the post, all right? In the post description, all right? There will be a link there. So if let's say don't have, just PM us, okay? Then I'll be share with you the link and then share with you more about our training course. The next intake will be on May, the first week of May, 2 days training class, and then every week we will have a tutorial class. So to go through with you each of the stage of the big boys, and in every stage of the big boys, what kind of strategies or trading method that you can apply into it. When they are moving up or when they are going down, there are opportunity for us to look into for a trade. Okay, so if you want to know more, you can look into it. Okay, but I'm going to share with you something that is related to the current market right now. Because current market, we know there are a lot of retrace. Most of the stocks are retracing, which I shared before, I think 2 weeks ago, that I shared out the live stream. I warned you guys, asked you guys to be careful with it. So I hope you guys are able to avoid going into it, into the market. But of course, when the market is retraced or going into a retrace, we have opportunity to trade. Just that whether you know how to read all these transactions, or you know how to read, interpret all these data. So the data, everything is in the market in our trading platform. Just whether you know how to look into it. We are not going to just look into the chart. We are not going to look into the indicators. We will look into charts, of course, the daily charts, and then we're going to look into deeper into the 5-minute charts. When I'm doing intraday tradings, okay, then I'll look into 1-minute charts. Okay, so that's why all these things is that just that we are so used to, you know, the traditional technical analysis is telling us, okay, you should actually do this and then wait for this and then go in and then wait for the price to hit your profit target. If it doesn't hit, then you hit your cut loss, then you cut loss. Okay, so that's why the more you use that way, the more you find that confused. All right, so you're not sure like, whether when market is good, you are able to make a lot of profit from it. But when the market is bad, you apply the same strategy, apply the same method, and then you start to lose all the profit that you have made. So it becomes you are not able to make consistent profit. So how to make consistent profit is not, you can't just use one strategy into the market. You need to know what kind of trend right now. Like for example, right now it's going into is in the retrace. Okay, all the stocks are in the retrace, but it's slightly showing some sign that some of the stocks, some big boys actually comes in to actually have some support. Okay, so this might be the time where we need to look for the rebound opportunities in the market. Okay, so I'm going to show you some of that later. But the first thing, trading method is one thing, analysis is one thing, but up until the end of the day, throughout my whole trading experience, is that I find that, of course, most of us, when we enter into a market, the first thing, the stock market, is because you want to make profit. So all of us are chasing after profit, right? So when you are chasing after a profit, that's why when the market is good, you are chasing after, you are able to chase that kind of profit. When the market is bad, when you're losing, then you still want to chase after the profit, then it will be very difficult because the market just doesn't move up. So you tend to switch yourself because you have been doing a lot of trades in the bull market. When it comes to bear market, you cut loss, you cut loss, you cut loss, you cut loss, you keep on cutting loss. Why you do that is because you find that the more trades you keep on, the first trade you cut loss, and then you think that, okay, the second trade you want to make the profit to cover back the cut loss, so that you go into another trade just because you want to make profit. And then the second time you cut loss again, and then you start to look for the third trades again. So continue on. The more trades, the more mistake that you make, the more profit you will lose. So the question here is that it's not how much you can make, is how you can protect your profit. Okay, so the first thing is you shouldn't enter into some of the emotional trade. So these are the emotional trade. So this one you will need to actually consistently ask yourself. So maybe I can do something over here where every time the first trade and then the second trade you have a loss, you always remember me and you remember what I say. Okay, Kelvin say right now stop trading. Okay, you have done two losing trades right now. Sit back. Okay, take your both hand away from the keyboard and the mouse. Okay, and then start to think or leave your trading desk. Go out, take a walk, cool down, reflect to the trades that you have made just now. What are the mistake that you have made? Okay, so even myself also I make mistake. You can see this week for the day trading live stream, I did a mistake. So the second half, I do another live stream over there, and then I do a reflection from there, and then I know that what kind of mistake I did, so that I stay away from the trades. Okay, so of course during that time you feel that kind of emotional where you find that you want to trade more, you want to gain back. Yes, you want to trade more, you want to gain back. But let me tell you something that is the fact. We are all adults here. All right. So we know how to we should know and we should understand ourselves a lot. If you can't realize this when you are making a mistake, then you basically maybe, I won't say you have to realize it, because every one of us is an adult. So we are able to sit back and then we learn from it. Okay, we need to tell ourselves, okay, Kelvin said this before. Right now I'm making two trades of losses, so I'm going to sit back. Okay, I'm not going to chase after it, because I know if I chase after it, it will be continue on with the losses. So the most important thing is reduce the losses that you have. The number of error that you could make, you need to reduce that. So if you reduce that, then the whatever profit you have made earlier on, if let's say just the two trades, the mistake that you have made, your profit will just goes down a bit, and then you wait for the right time, for the right strategy that you can apply into it, then you enter again. That's where your profit start to move up higher. So it's not going to be move up and then goes all the way down your profit. So you basically not working, you're working, you're basically having nothing in the market. So if you're doing this kind of trades, okay, so that's why these are the things that you have to be aware of, because every one of us is an adult. We know how to stay away from things. We have conscious. Okay, you need to know this. Okay, so this is a bit of the psychology part. So I guess every one of you, so you need to remember what I say. After two trades, Kelvin say stay away first. Okay, cool down. All right, reflect. What are the things that I've done wrong? What are the mistakes that I've done wrong? And then don't go into a market first. Let yourself cool down. Next day, only look into it. You need to tell yourself, okay, you don't go in right now, you are making profit. If you go in right now, you might be making losses. Okay, so make lesser losses so that you can protect your profit. It's not how much profit you make. Every one of us, we know we want to hit a home run, and then we want to make a lot of profit from the market so that we can actually cover the losses. So if, let's say this is, let's say a cup here, all right? This is a cup. If let's say there's a hole at the bottom, if the water keep on pouring in, you will not fill that thing up. So this hole over here will be your losses. So you need to actually cover the losses so that you can fill the cup full. Okay, so these are the things that you need to look into it. So this one is more on the psychology part that we need to manage. But I find it, maybe some of you might be easy, some of you might be difficult. Because, you know, when you're emotional at that point, you just keep on want to enter into a trade, and then you want to make more profit from it, right? So that is the emotional part. So I leave it to you guys to practice for yourself. So I can't just sit next to you and then tell you, hey, stop. I can't do that. I can do that, but just that Will you listen to me? Would you listen to me on this? It might be another story. Okay. So another thing that I can actually helps you, I find it to reduce this kind of emotional trait. One of the things, the roots of this fear or this uh, emotional actually comes into your trait is because the fear of losses. So when you're fear of losing, then you is because you are exposing too much of funds or value into the market. Like for example, I always ask some of the clients of mine, they always come and tell me, okay, or maybe some of students, they'll come and tell me, Kelvin, even friends, okay, some of friends actually come and ask me also, Kelvin, I want to invest into the stock market. All right. So if let's say my friends are watching this, okay, don't worry. You are not alone. What I'm referring to is most, not most, all of my friends or all of my clients that they just started to want to invest in the stock market. They will ask me one thing, Kelvin, I want to invest in the stock market. I want to do trades. I want to make a secondary income. How much? No, they will ask, can I make 200,000 in 1 year? So the question is, the answer is very simple. You can make 200,000, you can make 1 million, you can make 2 million, you can make 3 million, but just that, are you ready to lose that half of your fund that you invested in? Okay, you can have like maybe 10 million and then make 1 million, you can make 10%. You can have like maybe 100 million, then you make 1%, sorry, not one, yeah, then you make 1 million, you make 1%, right? So depends on the funds also that you can put in. So that is the initial questions. How much fund that you are going to put in? And if this fund, let's say you want to put in 100,000 or maybe 50,000 or maybe 20,000 or maybe 10,000, okay, for every one of you, the first thing that I will ask, if this capital you are going to lose 50% of it, let's say 100,000 is going to be 50,000, 50,000 going to be 25,000, and then 10,000 is going to be 5,000. If you're losing this 50%, the 5,000, 25,000, and 50,000, do you feel pain? Do you feel like sad, or do you have any emotions into this kind of losses? If yes, then your initial capital is too huge for yourself to handle. Because if a lot of people do not aware of this, when they park in the money, they only think of the profit. I can make this much, I can make this much. I can make average annually 30%. So it doesn't mean that you can make the same thing, because we have different analysis and the experience of emotional handling. I would say out of these 10 years of trading experience, learning how to analyze the market is just a very small part. I won't say it's not important, it's important. But throughout the whole trading over here is about emotional, how to learn and understand ourselves, myself. What kind of situation I will have this kind of emotion? What kind of situation I will feel angry? What kind of situation I will feel sad? I will rush into a trade. Okay, so trading is not just like in the past, everyone thinks that it's a way of gamble, or the stock market is full of sharks. Okay, indeed, it's full of sharks. Okay, so it's about learning, understanding ourselves. So if you are able to success in trading, basically you can success in a lot of area, because you understand yourself really well, and then you know how to handle your emotion and then control it, and then you know how to reduce the chances that you make the mistakes. So that's why the initial capital that you put in, you shouldn't look at how much you can make from your initial capital, because there are risks. Stock market, there are risks. Everywhere we go, there is risk. So we need to actually reduce that. If 50,000, 100,000 reduced to 50,000, and then you still find that, losing 25,000, I still feel pain, then reduce it again to 12,000. Start from small. So it might felt like it takes a long time for you to grow that kind of income or maybe profits or returns from the stock market, but you need to understand one thing. Right now, you just put your foot into the stock market. So you need to take time to understand this skill. Do you think a doctor can just, go to university and then without what they call it, I don't know, to work in the hospital and then to do practice, okay, and then can start to do surgery for you? If they can do that, we'll be worried about that. Okay, not just that, that is doctor professional. Basically, traders can be professional as well. If let's say you are doing something like, let's say, as simple as accounting, a person that do not know how to do accounting, they have not practiced it for very long, every day, they are not professional, because you need to practice it and then you need to look into it every day. So those are professional. Okay, so that's why you are first in the market, so you need to practice first. It's not just about the trading skill or analysis, it's about every time when the trades you enter, and then when you lose, how do you feel that? So for what I do here is that I will always ask my student to actually do that. Your initial capital, let's say, is 10,000, then multiply by 0.4. So 10,000 multiplied by 0.4, then it will be 4,000. Okay, 4,000 doesn't mean that you enter into a stock for 4,000 ringgit or 4,000 value. It means this 4,000 is the position sizing, the number of unit that you look into it. Why? Because in the market, every ticks that it goes down, you will be losing. If let's say you buy 1,000 lot, okay, 1,000 unit, 1,000 unit. So which means that in the market you call that is a 10 small lot, which means that times 100. So it goes down one tick, then you're losing 10 ringgit. Then goes down two tick. In Malaysia wise, if let's say 1 ringgit, it will be 1 cent, 1 cent, 1 cent. Then go down 3 cents, then it will be 30 ringgit. 30 ringgit to every one of us, find that it's not much. Okay, so you are okay with it. So you need to be relaxed and calm when you're doing trades. If let's say every cent it goes down, you are losing 10,000 or maybe 1,000, you find it too huge for you, then you have to reduce your position sizing. And which a lot of people in the market, they always like to do the position sizing in a way where go by value. If you go by value, let's say for example, you have 100,000, you want to buy 5 stocks. So each stocks you will be entering 20,000, right? So 20,000 for 1 ringgit, 20,000 for 20 cents, 20,000 for 50 cents, 20,000 for 80 cents. So different value of share price, you enter the same value, but the number of units that you're entering is different. 1 ringgit, you enter 20,000, will be a 20,000 unit. Okay, so if let's say a price goes down, then you'll be losing 200, 200, 200. So if let's say 20 cents, you're entering 10,000, is it 10,000? Yeah, 10,000 unit. So which means every stocks that it goes down, you're losing 1,000, 1,000, 1,000. So that's huge. So that's why you'll find that why every time you have a stocks that make profit but cannot cover these losing stocks. Why? Because this losing stock is a penny stocks. You are buying more. So that's why there are more losses, even though with a small price reduce or small price down. So you are not able to use the 1 ringgit stocks to actually cover the losses of that. So you lose more, and then you find that, okay, so since that one is losing a lot, so what you're going to do here is that you continue to hold. Because if you cut loss right now, you feel the pain. And then you start to look around in the internet, Google it about these stocks, whether this stock is good or not. Fundamentally, you see the previous quarter, everything looks good. Last year, everything looks good. How about now? Can the company right now have a hole that it doesn't fill in? Okay, maybe some auditor actually find out there's a hole in the accounting, there's a missing money, suddenly pop, come out, right? Or maybe some people report about the company saying that they are treating their employees not well, so that their customer or that company client stop the contract from them. So that's why these are historical data. These are historical statement, okay, financial statement. It doesn't reflect now. So when this news actually comes out, the market really react to it. So that's why I don't really look into the fundamental. I don't say fundamental is the main thing that it moved the price up higher. The main thing that move the price is always the demand and supply, and how this demand actually created that to push the price up higher. It can be in different form. Some is the company directors or the CEO, they know how to play with the value of their share price. They know how to increase the share price value by attracting more institutional funds come in. So when institutional funds come in, then it creates a huge force of demand to move the price up higher. Okay, so of course, based on that, they need to have a good fundamental. But with a good fundamental, if the directors or CEO, they don't want to increase the value of their share price or their market value, they just hold majority of the shares in hand, or the shareholding in hand. So the institutional fund will not come in. So that's why you find that there's a lot of stocks or company in Malaysian market, not just here, overseas also we do see that the company actually have a very low floating shares. Majority of the shares are actually held by the substantial shareholder or maybe the big shareholders. So you will find that the share price is not very liquid. So not liquid means like today they happy, they fly up, and then when it closing price, they feel sad, they can just go down. Okay, tomorrow suddenly it just move up higher. So those are not liquid. So institutional investor will not go into that, because once they go in, who are they going to sell it to? They can't sell it back into the market, right? Because when they sell in the market, then you will create a huge price fall. So because no one is buying it, it's not liquid. So that's why the ultimate thing that move the price is always someone comes in to create the demand. So those are one thing. Another one is it might be the big boys. Then of course, yeah. So this is how you know that the pricing mechanism, okay, not just in stock market, in overall everywhere. As long as the price, if you have the power to move it, then you can actually create the demand. Okay, if you have the power to create the demand in that, then you can actually move the price up higher. Okay, so this is the thing that I look into it basically. Okay, so you can try this. Okay, first thing, the emotional part, where you need to understand yourself. You need to have a certain degree of control of yourself. And then second thing is try to do this position sizing by using the initial capital. You don't have to do it every day, just that you just use your initial first time you park the money, your funds into the trust account, the broker account, and then multiply by 0.4, and then use that as the number of unit that you enter into a stock. For every stock, whatever price, same unit. If it's 200 lot, then 200 lot. So that if let's say 1 ringgit goes down and then the penny stock goes up, you are still able to offset. That is how you can reduce the risk. And also, you look into the lot size. If let's say go down 1 cent, that lot size 200 is too much for you, then you need to actually reduce that to maybe 100. Maybe lowest, I think the best should be about 50. Okay, 50, which means like 5,000 unit. Why I say that is because the overall market, the brokerage fees right now is about about 25 ringgit. So at least if let's say you enter penny stocks, you move up half cents, then you're still able to offset that brokerage fees. Okay, so this is one thing. All right, so you can try this out. The second thing that I want to show you guys is that is the stocks. Let's say for example, we have looked into some of the stocks previously. Wait, where was it? Not this one. So you can check out some of the stocks that we have shared to you in the past or in our Facebook page. So the thing is that, let's say if you look into this stock, you'll find that overall the stock price is going down, right? So a lot of people feel scared. The question is that we need to know. Now, of course, we can see the price is actually moving up higher. We need to know one thing is that how do we know that the price of this day is moving up? So the question is always lies before the price moving up higher. Okay, so maybe we look into a closer one over here. This one, I think I didn't share in the Facebook. It's not in the live stream. I think it's in the training class, okay, for the intraday trade. So this one you might not see it, but you can look back into some of our live stream, intraday live stream, because right now the market is in the going through a retrace, but some are moving up higher. So we are looking at the bottom. When are they going to have a bounce back up higher? So here is the thing that we can look at it. So you can see that this stocks over here on this day. So this one already moved up higher, of course. So you can see the price is going down. So basically, next day the price whether move up higher is actually lies between these two candlesticks over here. So these two candlesticks, if you look into a daily chart, you basically can't see anything from here. So you need to look into further details into 5 minutes. All right. 5 minutes charts. Which day again? 12 and 11 April. Okay, so let's look into it. 12 and 11 April. So we need, like I say, the demand. Demand is the thing that it will move up the price, or the supply, it will tell us the price whether they will move up higher. Oh, sorry, when the supply comes in, the price will actually goes down lower. So let me do a separator here. So on the left side of this blue line here is 11th of April. Here is 12th of April. So what I want you guys to look into it. So if you look further into the details, you will find that every time on the 11th, when the price actually hit the bottom here, there is a high volume actually comes in. And then the price never actually goes down lower during that day. So from here, we know that there are demand actually coming in, but it doesn't mean that it will actually rebound the next day. Okay, usually the next day they will have a small rebound, but the rebound is not saying that they will actually push up very high, but just that intraday the price might be goes down and then it have a rebound during that day. Okay, so this is what we see here. The next day on 12th, the price actually goes down, it bounced back up higher. So I thought at that time, at this point over here, is over. But when it continue on in the afternoon, when the price is down, so you can see after this, there is a high volume here. So after the high volume, the price is down. One thing here, a lot of people, when they see high volume, the price down, we always think that this stocks is high selling pressure because we only look into daily chart, but we don't look into the minute charts to find out more this volume, okay, whether it's a really sell down price volume or not. Sometimes, of course, the big boys, what they will do is that they will try to create the selling pressure to show the fear, to create the fear to the retail investor so that they won't come in. But we as a retail investor, we cannot just learn whatever from textbook, from technical analysis textbook or fundamental analysis textbook, okay? Because these are the things that majority of the 90% of the retail investor in the market who, what they say is losing money in the market, only 10% are making profit from the stock market. So 90% of these retail investors are actually looking into the traditional technical analysis and also fundamental analysis. So that's why, do you still want to read the same textbook as them? Okay, so no. So of course, when we look into it, we are adults, same thing. We need to question, we need to think. There is a high volume here. You can see high volume. The price is down. But if given this kind of high volume, in the same day, this volume here, this price here is down, but the volume only created this much. If it's really a very bearish price movement, with this high volume, the price should actually go down lower. But why is not going down lower? Why there is a high volume and then the price stopped there and moved sideways throughout the rest of the trading time. So this is the questions that we need to ask. Every time we need to ask. I find that I'm not sure, but the traditional, not to say a traditional, probably our education system that makes us this way, where we can't ask questions, even in school or in our family. If let's say we ask more questions, then we get like scold. Okay, we get scold. Or maybe in the workplace, okay, if let's say we ask more questions, then we get scolded. Why you so busybody? You know, that kind of things. But we ask questions because we want to know things, okay? We want to find out more. So this is the question you need to ask. High volume, such a high volume, why price is not going down lower? Why price still move sideways? Then you know the answer. Makes sense? Price down, high volume, it means this price down is controlled. And there might some have a bit of demand actually comes in. So this is like a support, right? Of course, this is just brief introduction to you guys on how to look into this kind of volume in 5-minute charts. Of course, if you want to look into details, you can even look into the transaction data, the transaction pattern, how much of volume actually comes in that is throwing down to the buy price, how much is it buying up to the sell price. So what are the transaction pattern, the time interval when they sell down, the time interval for each of the transaction that they buy up. So if let's say there are time interval of maybe 2-3 seconds every once or buy up every once, so those are basically attracting buyers because they make it so obvious for us to see. Because in the financial market, not just financial market, basically the world right now, things in the media or maybe some of the social media platform is shown us on purpose that they want to let us to see. Okay, so that's why we can't really just interpret whatever we see. Okay, we just can't believe, we cannot believe everything that we see. Okay, we need to actually think, okay, whether it makes sense or not. All right, so these are the things that we all need to learn. Okay, so same goes to the stock market. High volume in, we know previous day when there's a high volume, the price still pause at that point. So that actually one proof that the big boys coming in, there are some demands actually coming in. Second day, same thing, there are demand coming in again. So we know that next day the price, it will start to move up higher. Okay, so when it move up higher, so when is the time that they tell us that they have no intention to move the price up higher anymore? So if you look into a daily charts over here, 11 and 12 is where we see next day over here the price actually move up. So we need to know, when you look into this, into a daily charts, you find that high volume, price up, bullish. So that is what technical analysis actually tell us. High volume, price up, bullish. So that is, seems is good, but no, we can't just look at the surface. We need to look into the details of it. 5-minute charts, this is the day, the price actually move up and then move sideways. Same thing again, if you look into this, high volume, the volume is the same as the time when they push the price up higher. And why now the after that, these two price, these two volume, high volume over here, the price don't push as high as the previous one that they did, attracting buyers, because they are consistently creating volume, push up to create a kind of a fear of missing out to the retail investor, so that they find that, oh, I want to jump in. Because every big boys, when they push the price up higher, is not for the fun. They want to make profits, like every one of us. So they need to find someone to buy their shares. So who is the person that is going to buy? Of course, the retail investors. Okay, so this is how they throw it, the price down lower. Okay, so I'm not sure, but from here, high chances next day the price will start to have a retrace. Okay, so these are the things that we need to look into it, the details of the transaction data. Okay, so from here we know that this the way the big boys are able to apply into price and volume action. So you know how to, when you know the basic idea of looking into the data. So we shouldn't be looking into the surface anymore, looking into the traditional technical analysis. If you plot the support, all those speaker or maybe analysts, they always say like, okay, if let's say the first support it doesn't hold, and then we look into the second one doesn't hold, we look into the third one doesn't hold, we look into the fourth one, then the fifth one, then the sixth one. I'll ask, okay, how long you want me to hold, right? So these are things like we have been using in the market and it's not working. I won't say not working, but sometimes it works, sometimes it doesn't work. Okay, so we need to wake up, okay, and then to learn, to question more about the market. If let's say you have been looking into the market for the same thing, try different indicator, try different strategy, try many things, but still the same. Every year, probably you are able to get like maybe 10%, 20% during a good year, 30% during the good year. But during the bad year, you lose everything down, and then maybe lose a bit, and then when good year again, then you make a bit again. So if you are frustrated with this, then it's time to change this. Okay, so yep, we have our training course. So it's starting on May, the first week of May, Saturday, Sunday. Then after that, every week, continue on 6 months, we will have a tutorial class to show you in the live market trading, not to say live market trading, the live market examples in the market. Then we will do homework based on the live example. So from there, you can learn better. And I will show you every month. I'm gonna feed you with the each chapter every month. Okay, how to accumulate, not us, how to accumulate, how the big boss do accumulation, how we enter into it, how we do a midterm trade, exit at the high side, and when the price is at the top, what kind of trading strategy that we should apply into it. So all this will be taught there. Okay, so this is different from the normal technical analysis where you can learn from online, internet, Google, Investopedia, or some of the courses also teach the same thing. Okay, so this analysis, I call it operator analysis, is actually developed through my experience looking into the Malaysia stock market. So it's applied into the Malaysia stock market. But of course, if let's say you want the same principle, you want to apply into US market, you can still do so. Okay, but just that you need to tweak a bit, do some changes. So if you want to know how I change the strategies to apply in the US market, I have a live stream on Tuesday night, every Tuesday night. So you can see from that. I'll start with paper trading first, and then once I find the right strategy, then I'll start with a real fund into the account. Okay, so if you want to know more, we have a training course. So training course include everything in different market, what kind of trading strategy that you should apply into it, intraday or short term or mid term or just contra trades. All this is in one, because you need to know all this. It's 6 month training course, so it's not just like 2 days training course and then every month you repeat the same thing. All right, so you can look into you can PM us, or you can look into our posts, okay, this live stream description, to find out more about our training course. All right, so that's all here for my sharing. So let's see, any one of you have any questions that you want to ask, you can actually put it into a comment box. But let me share with you one thing first. No stocks, okay? So I can't publicly share stocks, okay? So yeah, or maybe if let's say you want to ask more about the market, it will be on tomorrow. Yeah, tomorrow I'll be doing the live stream for Market Outlook, so you can go there and have a look into it. Okay, so remember to PM us on that. So I'll see you guys again tomorrow for the Market Outlook. Thank you. Bye bye.